importantly, what lies ahead. But from one earnings candidate to another, let's take a look at ThyroCare's earnings and strong profit growth in Q4. Margins have expanded sharply. Volume growth has been good, and the pathology business has also seen some very good momentum. So let's try and understand what worked out well for that company in Q4. We have the MD and CEO, Mr. Rahul Guha, who's joined us on the show to take us through what the quarter was and more importantly what lies ahead. Mr. Guha, morning and thanks for your time. Let's start by breaking down your financials. Your net profit has doubled on a year-on-year basis to 47 crore rupees. If you can help us understand how much of this was operating leverage versus any one-time items, if you can just throw some light on what aided your profitability in Q4.
Sure. In Q4, as you know, there was in last quarter about 11 crores of the exceptional item that we had provided last year. But other than that, if you look at it, the rest has all come from operating leverage. So I would say, if you look at the doubling of profit, about 10 crores, if you minus from that, the rest is actually just come from operating leverage.
Mr. Guha, can you also give us a sense of the pricing intensity in the market at this point in time? Do you think it has stabilized? Because the margins have improved in this quarter to 33.5% versus 30.8%, and that's a good jump which is there. But are you seeing competition intensifying and because there are many new players also entering in this market?
Yeah, see, it's very important to understand the scale of ThyroCare. Last year, we processed 209 million tests. That would be more than many of our competitors in terms of volume combined. So we are at a exceptionally large scale, which allows us to effectively buy reagents at the most affordable cost and also get significant operating efficiencies from our lab infrastructure. So ThyroCare has always been the most affordable in the diagnostic testing industry. And so that has been our stance overall. With regards to competition, I definitely feel competition has become more rational. Of course, the number of players are in there, but if you go back 2-3 years ago, a lot of players were, quote unquote, burning money to build a position in diagnostics. Now, I think most people have realized and rationality has come in. So pricing has normalized to, I would say, a rational level of competition. And in that situation, with our scale and our reach, I think we are able to compete very effectively.
But I want to talk about your top line as well, Rahul, because from what I see is that revenue per test stayed flat at about 36 odd rupees for the full year, despite a richer test mix when it comes to allergy and genomics. When is it to see these premium SKUs start moving the needle when it comes to realizations per se?
Yeah, I think FY27 is when you will see the year of ThyroCare in specialty. Most of the investments, allergy as well as genomics, only came live in Q4, and actually mostly in the month of March is when most of these technologies came live. We have entered into the market on the specialty space very aggressively with prices nobody has seen in the market, and we definitely feel the next wave of growth for ThyroCare will be specialty, particularly genomics, allergy, histopathology. These are all areas we have never forayed in. And I think FY27 is the year where we will really capitalize on our investments in these spaces.
If you can also give us a sense of, the jump that genomics will bring into your entire portfolio or the average revenues. You said that specialty diagnostics will be a boost for in FY27. What is the kind of delta that we are seeing here?
Difficult to predict at this point. I'll just give you some color. If you see our average revenue per test is 30 rupees. The average revenue per genomic test is close to 3,000 to 5,000 rupees. Of course, it really depends on how much of the volume we are able to pick up in that space. Given the launch has just happened in March, it's too early to speculate. Maybe by the end of Q1, I'll be able to give you a good view of where we think this is going.
Right. And what about radiology? Because that's seen a decline of about almost 9%. What were the main headwinds? And does it seem like, the weakness could persist all through FY27, or do you think there could be an improvement?
See, the degrowth in radiology is a conscious call. We, had opened many radiology centers. Many of them were loss-making, so we rationalized the pricing, and as a result, the volumes came down. But as you would have seen in the results, the bottom line has improved tremendously. And so it was a conscious call. I think we are now in a good place with regards to bottom line, so we can, think about growing the centers from a, let's say, profitable growth perspective. I think we had spread out too much in the radiology space, and our pricing was too low. So wherever centers were loss-making, we have basically taken up pricing, and as a result, volume has come down. But if you see the bottom line, it's actually improved tremendously in the radiology business.
So Rahul, tell me, you've mentioned in the past about scaling partner ecosystem, improving Tanzania footprint as well as one of your key growth drivers. What is ThyroCare going to look like 3 years from now, basis these two parameters?
We are the dominant player for affordable testing in routine and semi-specialized. 3 years from now, I hope to be able to say on this call that we are the dominant player in specialty for affordable testing as well. With the full test menu, allowing patients who couldn't afford genomics testing to be able to access it and really get the best care when it comes to oncology, when it comes to maternal health, all of these areas. So 3 years out, I definitely feel our mix of specialty will be substantial, and we will be able to call ourselves a full stack player in the diagnostics industry.
Can you give us a sense of the kind of guidance that you have now for FY27? You're looking at mid-teens growth guidance. Is that going to be the one in FY27 as well, or are you going to have a better top-line growth than mid-teens?
You know me, I'm always conservative in my guidance. It's been 2 years of back-to-back 20% plus growth, right? And so therefore, we're sitting on a very high base now. I think definitely mid-teens to maybe high teens is where I see us, for FY27. Of course, if the growth bets pan out in the way that we expect, we should be able to do better than that. But sitting in May, I think mid to high teens is a good expectation to put out there.
Okay, Rahul, great chatting with you. Thank you so much for your time, and congratulations once again. A strong quarter and strong stock reaction as well. ThyroCare 9 now at 505, stock holding up 7.5% as we speak. On that note, we're going to take a very quick break. Come right back. We'll talk more on the equity markets.